Internal Revenue Service IRS tax news. IRS updates LB&I examination directive on credit for increasing research activities. IR 2020-211, September 15, 2020, Washington. The Internal Revenue Service has revised guidance for examiners. There's a link to that revised guidance for examiners here in the Large Business and International Division, the LB&I, reviewing the amounts claimed for tax credits for increasing research activities. The guidance to auditors issued today modifies a directive issued in 2017. The credit for increasing research activities, Internal Revenue Code Section 41, enables taxpayers to receive a tax credit for qualified research activities, QREs, independently determining the correct amount of this research credit claimed by large corporate taxpayers can be resource intensive for those taxpayers and IRS examiners. This revised directive provides an efficient methodology for determining QREs for these taxpayers that meet the requirements of the updated directive. The IRS will accept as sufficient evidence of QREs the Adjusted Accounting Standards Codefinition ASC 730 financial statement R&D research and development for the credit year. Adjusted ASC 730 financial statements R&D is made up of the research and development costs currently expensed on the taxpayer's certified audited financial statements pursuant to ASC 730 for U.S. GAAP generally accepted accounting principle purposes, and includes certain specified adjustments made to financial statements R&D research and development. This directive only applies to LB&I taxpayers with assets equal or greater than $10 million who follow U.S. GAAP generally accepted accounting principles to prepare their certified audited financial statements showing the amount of currently expensed financial statement R&D research and development, either as 1, a separate line item on the income statement included in their certified audited financial statements, or 2, separately stated in a note to their certified audited financial statements. In addition, this revised directive does not apply to any taxpayer unless the taxpayer uses these same U.S. generally accepted accounting principle GAAP financial statements to reconcile book income to federal tax income on Schedule M3, which is part of the tax return. These revised directives modify the 2017 directive by refining definition of an eligible taxpayer, clarifying exam, audit, and alleviate review process, expanding the LB&I Commissioner's discretion for determining taxpayer eligibility, identifying additional documentation requirements, and removing all ASC 350 internal use software and website development costs. Eligible taxpayers may choose to follow the terms of the updated directive on original returns timely filed, including extensions for tax periods ending on or after July 31st, 2020. At the beginning of the examination that includes the research credit, the audit team will verify whether the taxpayer followed the directive. For taxpayers choosing to follow the revised directive, the audit team will ensure the taxpayer complies with the eligibility requirements provided in the revised directive. Revised FAQs, frequently asked questions, there's a link to that here, are available to further explain and clarify changes to the revised directive. The updated directive is not an official pronouncement of law and cannot be used, cited, or relied on as such. In addition, nothing in the directive should be construed as affecting the operation of any other provision of the Internal Revenue Code, Treasury regulations, or guidance thereunder.